Hello, my name is Edmond Jamna, and on behalf of DW Consult, I want to welcome you to Tutorials on the Go. Our zeal here is to help transition people with zero, struggling, or shaky base in accounting to an expert position and to a place of confidence. It is also a platform to assist in the smooth studying of the ACCA and ICA professional qualifications, as well as for any tertiary accounting discipline. All that is required of you is to subscribe to our channel and click on the notification bell as well to be part of the program. Tutorials on the Go, bringing accounting to heart. Now, to this episode's lecture, Group Account. Now, for a while, we've been studying on the accounts of an entity with respect to their activity. So today, we are going to learn about a situation whereby one entity, owners or shareholders of another entity or a number of them. Now, a number of companies controlled by an entity of shareholders is termed as a group. Now, each entity in the group is legally distinct. However, the shareholders will be interested in the combined performance of the group. Therefore, a single set of financial statements is needed to combine the individual accounts of the companies into a set of consolidated accounts. Let's move on to look at some definitions. The first of which is a parent company. Now, this is a company that controls another company or companies. The next one is a subsidiary. So this is the company or an entity that is being controlled by the parent company. So when we come to group of companies, it is the parent plus its subsidiaries coming under one umbrella. We'll move on to talk about consolidated accounts as mentioned earlier. So consolidated accounts are required when one company controls another company or companies. So control is the power to govern the financial and operating policies of an entity to obtain benefit from its activities. Okay. So control is presumed to exist when a parent, directly or indirectly through its subsidiaries, owns more than 50% of the voting power of a subsidiary. So control may also exist when a parent owns 50% or less of the voting power of an entity in a situation where 1. There is power over more than half of the voting rights by virtue of an agreement with other investors. So let's say the parent has 40%, goes into partnership with another shareholder with 15% holding. That the parent who has 40% can use the 15% in addition to his to make decisions in the company. So in as much as he owns less than 50%, per the agreement with other investors or an investor, he gains control to have the voting rights. The next point is when the entity has the power to govern the financial and operating policies of the entity under the statute or agreement. Thirdly, the power to appoint or remove the majority of the directors or equivalent governing body. And lastly, the power to cast the majority of votes at meetings of the directors or equivalent governing body. So let's now come to the consolidated statement of financial position. So the purpose is to show all the assets and liabilities that are being controlled by the parent company, effectively as though it is one big company. Okay. So when a company is acquired, the shares in the subsidiary company are purchased, and this represents the assets and liabilities of the company. The parent company records the purchase of the share capital as an investment in subsidiary and its statement of financial position. So this investment remains at its historic cost. So upon consolidation, the assets and liabilities of the companies are added together, and the investment in subsidiaries is cancelled out by the shareholders fund of the subsidiary company. Okay, so only the share capital of the holding company remains in the consolidated statement of financial position. Let's quickly test our understanding. On 1st January 2020, DW Limited, represented by D, acquired 100% of the ordinary shares of Favor Limited, represented by F, which was incorporated on that date. So on 31st December 2020, the statements of financial position of each of the two companies were as follows. So we have non-current assets for both companies. We have the investment in F at cost, which is 10,000. Okay, that's what they pay to acquire the 100% shareholding. Then we have current asset listed here. Now, when we come to the share capital, as we mentioned earlier, the investment of D in F will have to come and cancel the shareholding of F. So the retained earnings is also here. Current liabilities here. Then we are supposed to prepare a consolidated statement of financial position as at 31st December 2020 for the DW group. Okay. So when we come to the solution, so for the consolidated statement of financial position for the year ended 31st December 2020 for the DW group is as follows. So we start with the non-current assets. We add that for both parent and subsidiary, giving us 37,000. Then we come for the current assets, giving 17,000. then the total assets column will give 54,000. As I mentioned earlier, the investment here will not feature in the consolidated statement, but in the individual account of the parent, it will be there as seen. Okay. So when we move to share capital, we only capture that of the parent. The investment cancels the shareholding of the subsidiary. Okay. So upon consolidation, first rule is that the investment of the parent in the subsidiary cancels out. Then any value of the parent's holding in them is also cancelled out. Here is 100%. So all the shares of the subsidiary is being held by the parent, so totally cancelled out. Within earnings, we add both figures, giving 23,000. Then we come to the current liabilities as well. We add both figures. So the total liability and equity column will also give 54,000, meaning it has balance. We've done a great job. All too soon, we come to the end of this episode's lecture. I hope it went well. If you have any comment or feedback for us, do well to drop them in the comment section below. Whilst at that, kindly subscribe and turn on all notifications to stay abreast with our postings. Also, follow us on our various social media handles as captured on the screen. Join us on another episode of Tutorials on the Go. Until then, take care of yourself and stay blessed. Poker.